I want to get some of your stock picks and buy on the dip stock picks in a moment, but big picture thoughts. I guess the Fed is high on the agenda this week as one of the key factors. What are you expecting there and for the overall outlook for markets at the moment?
So we're rolling into 2022 with two key concerns, and that's Omicron and the Fed. First, taking a look at Omicron, each wave of variants has actually had less of an economic impact than the prior wave. So we don't think this is going to be a long-term hit to economic growth. We're also encouraged by seeing less hospitalizations and mortality rates versus where we were with the Delta variant at this point. Now, the playbook for the Fed for 2022 probably looks like this. They taper until about the end of the first quarter. In the second quarter, they'll be watching inflation. The base effects of inflation should actually help that number settle. And we're also seeing a shift in spending from goods to services. So this may give the Fed some breathing room before they start increasing interest rates. Markets are expecting 2 to 3 hikes next year. We think the Fed could come under that if inflation settles. And also, if you look at the two last big rate hike cycles, it took about 9 to 14 rate increases before the S&P peaked. So just because the Fed raises rates in 2022 doesn't mean it's the end of the bull market.
So sounds like you're pretty constructive for those broad factors. I guess the other one which we got a glimpse of last week was whether investors pivot from a kind of fear of missing out approach to U.S. equities to a, God, I better book some profits type approach. Did you fear about that at all last week? Could that happen in the weeks and months ahead?
I think it can because of valuations of the market. 2022 is going to be very dependent on earnings growth for companies. We can't count on valuation expansion. People are worried about that. We're very selective on the companies we're looking at. You need to find those companies with pricing power and ways to drive their revenues, because in order to drive that earnings growth, it's not going to be based on margin expansion, because margins are at about decade high for many companies. So we're looking, and we like the cloud sector here. That's an area of the market where it helps their clients drive revenues.
But doesn't it matter which cloud stocks you're going for? Because it's also an area that's been under some pretty heavy selling pressure, along with other high growth parts of the market, which that is.
Definitely. I mean, digital is definitely an advantage, but we need to be selective. We like Salesforce and HubSpot here. Salesforce actually was somewhat disappointing last week when they reported their quarter. They came into that quarter with a lot of expectations from their September analyst day in terms of margins and margin growth, and they disappointed in that area, as well as with their MuleSoft growing pains around that. But going forward, they still have a total addressable market. They can grow in the double digits. They can grow their own revenues by about 20%. So we like Salesforce here, and actually, as it declines, we think that would be a buying opportunity. They're a leader across the board, and HubSpot is a leader in the small and mid-sized client market. And as I mentioned, coming out of a recession, you want to focus on those companies that can help those clients grow their revenues, and we've tended to see that with these cloud companies in the past.